Hey everyone, and welcome to Earnings Cheat Sheet for Friday, November 8th. It's Alexis Garcia and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you get through the week ahead. But Ed, let's just get through this week. We had a lot of big events. We had a lot of mega cap tech earnings now in the rearview mirror. We had the election. Now we had a Fed decision with another rate cut. So, that's all setting up entering into next week's earnings. So tell us what you got.
Yeah, it's still a busy week. I want to take a look at Cava, Spotify, and Shopify.
All right, well, let's start with Cava, which is scheduled to report Q3 earnings on Tuesday, November 12th. Earnings are expected to rise 83% to 11 cents per share. Revenue is also seen climbing 33% to $233.1 million. And here's why we're watching Cava. We'll want to see same restaurant sales and whether or not those sales figures are thanks to increased traffic or due to price hikes. So Ed, Kava is really being looked at here as maybe the next Chipotle kind of model stock. And here's a fun fact for you. Every quarter since its IPO debut in 2023, Kava has beat analyst earnings estimates. But Q2 saw the restaurant chain post its first earnings decline in 6 quarters. And same store sales also slowed there too. So what's on your radar with Kava? This one has been, a pretty strong one this year.
Yeah, huge performer, really for the past year. Like it really took off, say, like November, December last year and just kept going. Yeah, it's the restaurant leader right now. And there are some restaurants that are still doing well. It's definitely a mixed bag in terms of restaurants, but definitely a few leaders. But this is the number one. Yeah, can you see that growth continuing? And the thing is that with gross auction, it's highly valued, and so people need to see that momentum. Is the same store sales growth, going to be picking up again? Is there going to be, store openings that are strong? Just things that are going to keep that momentum. Because yeah, there's a lot of positive things. People keep on talking about it, saying, "Oh yeah, I've been to Cava, it's great," and all that. So, just has to keep that momentum going. I think it'll be really important for the restaurant sector.
All right, Ed. Well, let's take a closer look at the chart because Kava is rebounding after hitting a recent high here. And, it tested this 21-day line and it also made a new high on November 7th at 141.62. So tell me your thoughts about the technical action here. Was this a chance to, add on? And what should investors be looking for?
Maybe when it came down around the 21-day line, I think on a weekly it got pretty close to the 10-week line. So there was something that, but didn't get there. So you could have, I mean, obviously that worked. I mean, if you bought there, I mean, it's like obviously you could have. And if you did, it worked. But at this point, it really feels like it needs to have another pause. And you certainly could have a pullback. If it pulled back to the 50-day line, that'd be not a huge drop, but it'd be something. So that they've done that a couple of times, undercutting the 50-day line, including a pretty significant undercut back in July, August. So I think that investors, if you've got it, you've probably got a big gain because you probably entered it a long time ago. So there's no reason not to just ride right into that. But I don't know where somebody could find a new position anytime soon in this name.
And Ed, we see the great fundamentals here, just phenomenal earnings and sales growth, a great RS rating. But talk to me about volume, because volume's also kind of been a little light here. Does that give you any pause for concern?
Yeah, and it did that. It's done that before. Like it sort of did when it started making the comeback back in July, August. There wasn't necessarily there was a couple of days, but not necessarily. It was sort of one big day, and that was it. And it was a good day, but there was definitely some wedginess. And then again in September, when after the earnings gap up, then it came back down, and then sort of wedged higher. But it's kept going, so it's something to note that there's been sort of some light volume in there, but the price action has been really strong.
All right, well, let's move on to our next stock, which is Spotify. That company is scheduled to report Q3 earnings also on Tuesday, November 12th. Earnings are expected to surge 426% to 184 per share, and revenue is expected to jump 23% to $4.39 billion. And here's why we're watching Spotify. We'll be keen on subscriber growth numbers and looking to see if recent service price increases have given any boost to that gross margin. So, Ed, Analysts have said that Spotify is in the sweet spot here of growth and profitability. That's at least according to KeyBank Capital, which gave Spotify a price hike target back in early October. So, talk to me about why Spotify is on your radar.
Well, it has been a really strong performer, and as you say, there is this sort of it's hit that moment, okay, when you go, it was losing money, losing money, losing money, but it kept on growing subscribers. And the fact is, every subscriber is not 100% gross margin, but it's pretty close. This isn't like when you have to package, a bottle of ketchup. That ketchup costs money. There's only so much money of gross margin, but it's almost infinite when you get to essentially a software company. That's what, Spotify is. Just like every Netflix subscriber really doesn't cost them anything. So beyond every once in a while they have to add servers, when they get too many. But so that's just been that transition. So now they've just generating this huge earnings growth, and that's a great time to be in it. And people anticipated it. It was moving before that really kicked in, but it was like, okay, people could really see how this was going to move into it, and it's continued on. It's the dominant leader. There's nobody else really, coming into it. Potentially they could, but Spotify has the music, it has Joe Rogan, it has a lot of the things. So it's sort of the must-have, and sort of like a Netflix, the Netflix of music and audio, and that's a pretty good position to be in.
Right. Well, let's look at the chart because Spotify broke out of a 6 week consolidation pattern here back in September. And since then, it's kind of been, hovering above this buy zone. But, looks like it really moved out on November 7th, a nice 2.2% gain there. So, what are your thoughts on the technical action and what would you like to see set up?
Look, if you own this would be pretty positive. I mean, now even those who bought at the previous space are probably up about, 10% or so. So that's gives them some cushion. This is really strong. The relative strength line is near highs. The last couple of days have been really strong volume. Obviously, you're getting that post-election boost. So that's a positive. I will say the one thing is that earnings are coming up, obviously, so you wouldn't want to, on that, but if it moved higher on this, it would feel somewhat extended. So it's not clear where you'd buy it. Also, if you look at the prior, there was a big run from say, late last year for several months, but for the recent months, it's had these stair steps where it goes 2 steps forward, 1 step back. So it breaks out, but then pulls back into the base. So the breakouts would be tough. That sometimes, maybe if we go on a big bull run, that won't happen again. But it does suggest maybe you want to buy on a pullback rather than buying on the breakout. Again, that could be a reflection of how the market's been and won't be, but so that might be something where you want to wait for a pullback.
All right. Well, great analysis, Ed. And let's move on to the next name on our list, which is Shopify. That company reports earnings again on Tuesday, November 12th. The e commerce platform is expected to see Q3 earnings rise 12.5% to 27 cents per share. And analysts expect revenue to climb 22% to $2.097 billion. And here's why we're watching Shopify. We'll be looking at gross merchandise volume and how well Shopify has controlled expenses. So, Ed, looking at Shopify, it's been a little bit rocky over the last couple of years. We had that big decline back in 2021, but it's really tried to rebound. And I think the key word for them has really been streamlining. They've tried to streamline operations. They sold off part of their logistics business, and analysts really see that as a potential growth driver. So, talk to me about Shopify.
Yeah, that was a real big turnaround when they sold the logistics. It's all of a sudden a huge amount of their costs. And basically, they were going to compete against Amazon. And it's like, and so then it's like, we're going to give up. We're going to give up on that, honestly. And then not only did they save money on that from that issue, but then Amazon said, hey, we're going to do more of an alliance with you now that you're not going to be our competitor, because Shopify basically does e-commerce sites mostly for small businesses and stuff. We'll set those sites up for you. And they were trying to do fulfillment. They're getting out of that. This one makes big moves, but it also makes big sell-offs. As you say, like it's had some whippy action. The growth that's been solid, it's going to start cooling down. There was this enormous gain when they sold off that unit, and all of a sudden, basically, they wiped out a whole bunch of their costs, and just had this and turned around. But now the growth is going to slow, but it's still a solid pace. And it's a nice gauge for how e-commerce is in the economy as well, and the health of the small businesses, honestly.
Yeah, Ed, and let's take a look at the chart because we can see here, this says consolidation, but if you kind of maybe you could see this as a kind of a long cup with handle. it pulled back to the 50-day line and has really moved out of there over the last week. November 7th, having a nice gain of 4.4%. So, talk to me about, was this bounce here a potential entry, and how are you looking for this to set up as earnings approach?
Yeah, and again, this is a 47% deep base, which is a little painful there, but because that's deeper than you'd expect. Yeah, I think you could have bought it on the day after the election when it sort of broke the trend line of the handle. Could have bought it today, but really, it's sort of up there now versus the 50-day line, especially given that the earnings report is coming up. So there's not a lot of time. I mean, this can move fast enough so you would have cushion, but when those things not, but there's a good chance that you won't. So there'd be a decision. Afterward, maybe what happens is, like, if it settles down, or if it trades around this buy point, it doesn't move like that, might provide an opportunity, or if it, pulls back a little bit. But it could be that you need to see another base form, or at least another handle or something next to it. Because often what you'll see is these big messy bases, and they're a little high risk. And then they set up another base right next to it, near the top of the base or just above it. And so it could be that in 6 weeks, 2 months, we have a tighter base that is more actionable. And so that might be the better way to go at this time.
Yeah, and Ed, same story here. We've really seen volume kind of quiet down here over
Mhm.
the last couple months, since August. Any thoughts on that?
Yeah, at least it got that big, powerful gains when it came off the lows. I mean, it was clearly, and even when it bottomed. So some of those big days it was showing sort of, so that was positive. We've seen volume pick up on this last few days a little bit. I mean, I don't want to say too much. And obviously what average volume is falling off again. So it's an easier mark. I get, but on the positive, there hasn't been any real down days. So it's nice to see a little bit of pickup, but yeah, it would have been nice to have seen a little bit more volume on the upside.
All right, Ed. Well, those were some of the big ones on our radar, but let's take a look at some more, shall we? Starting with C Limited. Now, again, this one is a Singapore-based company. I think they've got some e-commerce platforms that compete with Amazon. So it looks like this one hovering in a profit zone here, Ed. So talk to me about this chart.
Yeah, so it's been consolidating here. Trying to think about like a 10-week line, if it found support there,
Yeah,
sort of around there. That might be a nice thing. If it could find support there, it was sort of trading tightly. I think that there was a tight pattern in there.
yeah,
So
3-week tight.
3 weeks tight. So it could be that there's a bounce off the 10-week line. You could even use that tight area. That feels more like an add-on buy area, unless it consolidated it for a couple more weeks. But yeah, this has been a strong performer. You can see there's been some big blue spikes. I mean, the volume is oftentimes there's, but some of that's been the earnings, and that's not unusual. It's had some good reactions to earnings the last few times overall. Can that continue? I don't know. It's nice to see that there's overhead resistance still from that huge sell-off in 2021, 2022, but it's at 2-year highs essentially. So, a lot of the people who bought it before, that overhead resistance becomes less pressing. So it'd be great if it could hold here for a couple of weeks. There's a good chance it's going to do a big move up or down, so making it difficult to start a new position.
And if you did have some profit cushion here, are you looking at that 10-week level then as, if it falls below there, maybe chance to sell?
Yeah, I mean, it's like it depends on where you bought it, but if you bought it more that recently, like under 80 or around that 80 area, then maybe you would want to, sell, especially at the end of the week. And if it's decisively below the 10-week line, like more than 2%, you might want to at least take some partial profits there.
All right, well, let's move on to the next one. That's On Holding. They make all the footwear that you probably see around. And this one, retook that 10-week average here, Ed. Um, but, some earnings reports from industry peers have maybe spooked investors a little bit on this one. So talk to me about the technical action here.
Actually, very recently, they've probably gotten some advantages. Deckers a couple weeks ago reported, and that one actually was breaking out on November 7th, or at least was trying to. Then it came back, and that was also moving, and both Deckers and On were also moving today, November 7th at least, on Under Armour, which has been a laggard but is starting to come back. And so that's sort of providing some positive. There's been some negative reports out there too, but and I wouldn't need to disclose I have a position in this stock, but it's potentially sort of has it's working on a new consolidation. You could probably treat 5150 as a buy point. Maybe there's a trend line going down from the top of the base that you could use it, or it sort of came up. Well, yeah, so right there. So it sort of came up to it, but I don't think you'd want to do anything with this with earnings. You can see how this one can make some big moves on earnings, some big reversals on earnings. There's all sorts of things out there. This one can really, really move. So again, this is true with all of them, but if you don't have a decent cushion, you probably shouldn't be getting into this name heading into earnings.
Well, we all know on footwear is about cushion, right? Let's take a look at Instacart. Again, this one, a big gain today, about 1.9%, pretty extended in a profit zone if you bought back here in September. So what are your thoughts on this chart?
Yeah, had a few buying opportunities you could add. There's nice volume. It seems to be maybe this is going to turn around. You can see there's supposedly some good earnings growth this year. We haven't really seen it, so it's probably going to be a big turnaround at the end of the year. Revenue growth is starting to pick up, but it's really extended. I mean, it's done great here. There were some opportunities you might have felt, I'm not that excited about it, but it did turn out to work out really well. But now I think that people want to wait. It's in the profit-taking zone, which could be an area. Sometimes they just keep flying, but sometimes this is where they come back. So it could be that investors who bought it on the breakout, they could consider partial profits. It's really about how they want to play it and like what's your conviction in it, what's the size of the position. I mean, that goes for a lot of these names.
All right, that was Maple Bear. That's the parent company of Instacart. Let's take a look at CyberArk Software, Ed. And this one, again, had a really nice rebound, retaking that 50-day line on November 6th with about a 5% gain and continued to move higher on November 7th. So, what are your thoughts here?
This one's messy. I mean, it's like it's held up okay. Sometimes it's almost like you'd almost like it when a stock would fall off and then come back instead of fighting, because this one kept on getting knocked down. You could say 283 or some other spots. The 283 zone, a lot of trading going back a long time. And so you could argue that going back above the 50-day line, once again, it's back above, but it's done this before and got knocked back. Earnings could end up great. They could end up bad. So this is also an Israeli company, a lot of Israeli cybersecurity firms, but that's just another risk out there. Just keep in mind if geopolitics comes in, this can take a knock, here and there.
All right, let's take a look at Shift4 Payments, Ed. And this one flirted with that 21-day line on November 6th, but really reversed higher, up about 8.8%. And tell me about this chart.
Yeah, the break above the 21-day line, sort of bouncing from, sort of extending a bounce from the 10-week line, sort of could have treated this as like a high handle to this long consolidation. So that was potentially actionable. It seemed like a lot of payment stocks were moving on the day after election day. I don't know if it was because you could vaguely say there's something crypto related. That's true for some, not for all. And I think they do some crypto, but I don't think anybody would really consider this a crypto play. This one feels like it's sort of gone. And now, I mean, it's not crazy away from the short consolidation or the high handle, but earnings are coming up, and I think you just want to wait for that to come out. But this is a guide. There's a lot of payment stocks that are acting well.
Let's take a look at Zeekr. That's a Chinese EV company. They also have a partnership with Amazon for some autonomous vehicles. So, Ed, we're on the weekly chart here. Talk to me about what you're seeing.
Now, one thing about Zeekr is that it's a unit of Geely, which is this giant company which also owns a big share of Volvo. It's sort of a weird ownership. So but Geely is a very big China EV maker and automaker, and Zeekr is one part of that. And that's been doing pretty well. So big sell off because also a lot of China stocks were just tumbling after its IPO. Really bad time for China stocks generally. China stocks have rebounded on stimulus and other things. There's sort of a messy type of handle kind of action, sort of, that you could sort of see in here. It'll be interesting to see how this one does. It's trying to battle back again. It's losing money, but there's really strong growth. That growth has continued. I assume we're going to see really strong growth as well. I mean, the comparisons might be getting up there, but I know that Q3 unit sales are really strong, and that's continuing. So you want to see how that goes, but there probably would be around 29.31 or even some kind of lower if you're interested in. There's some other names that are interesting, but people may not be that familiar with this name, and so I wanted to make sure people saw this one.
All right, well, let's take a look at a couple other China stocks since we're there. Starting with Alibaba. Like you said, we had that big rally with the China stocks, and this one has really pulled back. And now, it tested that 50-day line, but now it's come back up around this 100 price point. So, what would you like to see set up here?
I'd like to see it pause for a little bit, or maybe run up, and run up and then form a handle and like create a new base. Like sort of this is a base next to some giant consolidation. To be honest, we might be seeing some new stimulus news in the coming days. It may end up being vague and maybe a disappointment. So that could be something ahead of the of earnings out there. Also, we have Singles Day, which is this long, long event that goes through like 11/11. Now it used to be a one day, but now it seems to go on forever. But it's an enormous, Amazon Prime is nothing. Amazon Prime Day is nothing compared to that, and they all participate. But so that's something that'll be interesting right around the earnings. But I think it needs to set up again. It's been very volatile.
All right, how about a look at JD.com, another China e-commerce retailer, and kind of the same story here. We had that nice run up as China stocks were rallying, but this one really pulled back. But seems like it wants to kind of maybe hang out here around this 41 price level.
I think that would be really nice if it could do that. I don't know if it will. That's the thing. There haven't been, this made such a big move, but it's been hard to find places to enter that feel safe. This moved a lot. And again, that always is an issue. It's like just we saw with the election here, is that sometimes the event, you just don't know. There's events in China that can just have this overwhelm anything else that's going on with the particular company or the particular stock.
All right, well, let's jump over to New Holdings. They also have earnings next week. And this one broke out here on October 28th, but then rolled over below that buy point, tested the 50-day, but now it's rebounded here over the last few days and back into that buy zone. So what should investors be thinking about here?
Well, first I want to disclose I do have a position in this one as well, and I have decision to make because it's on the edge of having enough cushion. So I'll have to think about that. Yeah, nice action off the 50-day line, but I just don't know. You can see that it can make some big moves. This is, I've said, like it's one of those rare stocks that Warren Buffett and Kathy Wood both own. So that sort of makes it interesting. It's strong growth, which we've seen with obviously a lot of these things. So, probably will deliver strong growth. Will it be strong enough for things? That's always the question. But you can see that it's made some big declines as well in there. And sometimes it has shakeouts. I mean, breakouts have been tricky with this one. It'll go above the buy point, then it won't, then it won't, and then it will, and then oh, it comes back again. I mean, difficult to trade the last few months. It's gone up, but that's just an issue. So I want to be careful here. It feels like 50-day line has been a safer place than breakouts.
All right. Well, Ed, let's take a look at Monday.com. That company also reports earnings next week. And this one looking extended here. But talk to me about this chart.
This is one of the stronger performing software names. It's definitely extended, and I appreciate that Monday.com is going to be reporting on Monday.
All right, great. Well, let's head on over to Cisco then, another tech name here. This one broke out on November 6th and is in that buy zone. So, what are you hoping to see here?
I think you want to take a look on a weekly chart or even a monthly chart on this one because it's coming back, and there have been names that have done that, like Microsoft a decade ago, then Oracle, and some names, IBM. But this one still has earnings that are declining. Maybe we're going to turn around, but the relative strength line really has been lagging. I think actually, if you go on a monthly, you'll see, yeah, it's picked up the last few months, but it's been down. Well, it peaked back in 1998, but even so, it peaked back in 2018 again and really hasn't broken that downtrend in the relative strength line. So it just feels like there's other things that are out there. It won't be more of a proving situation. Maybe if it could move up and then set up another base. So nice, it's still a big company. Still, what it has to say will be important about spending, but there's just been a long-term laggard on, now it has been.
Yeah, especially when it comes to other AI names out there. Let's take a look at Home Depot because they're one of the first major retailers that will be reporting. I'll switch back to the daily here, but this one broke out back in September, had a nice gain, and then as we've seen, the pullback here retook the 50-day line on November 7th. It's just above that buy zone now. So Ed, what are your thoughts here with Home Depot? And if you bought back here on the breakout, what should you be thinking about?
I mean, if by breakout, it's you don't have much cushion. It's 6 or 7%. There could be, it's interesting. It held up reasonably well given the interest rates have come up a lot. That's something that actually kept on going for a while. And home builders and a lot of housing stocks fell off. So it's fighting on that area. You could argue that if it breaks above here after earnings, the 400 level, which is just above the top of that prior consolidation, breaking a trend line, breaking the 21-day line. So there's a lot of reasons why you could argue that could be a place to buy it. Again, doesn't have the strongest growth. So you have to wonder, there's only so much you can go. It's sort of like at my age, there's only so far I can run. I might run for a little bit and then it's just like, that's it, I'm done. I'm done. And so after like 30 feet, 30 yards, I'm not sure, but I'm done. And so that's just an issue because when it's slower growth, there's only so much. Doesn't mean it can't go on runs. And we've seen it did go on a decent run. It's done that a couple of times, but then it'll probably take a break. So just have to just be thinking around it. It's fine to have something like this in your portfolio, but just you have to know what you're getting into.
All right, Ed, let's wrap with a look at Zeta Global Holdings. Some nice gains here over the last couple days. I had a 9.8% gain on November 6th, continued to move higher with a 7% gain on November 7th. But yeah, talk to me about this chart and what do you think is interesting here?
I mean, it's been a real leader. When it took off back in, June, July back there, it just really didn't stop. It was mostly riding the 10-day line, 21-day line. Yeah, it sold off when maybe the market came under a little pressure, bounced right back. The problem is now it's extended. And I don't know from the 50-day line, it's got to be, 15, 20%. I think you'd want to wait. If it paused for a week or two around here, then you might start thinking about it. But I think a pullback to a moving average or an actual base is what this is needed for to take a position in here now.
All right. Well, another great one to add to the watch list. Thanks so much, Ed, for your insights today. That wraps it up for this edition of Earnings Cheat Sheet. If you want even more market analysis, be sure to tune in to Stock Market Today with Alyssa Quorum. That goes live after the closing bell. Thanks so much for watching, and we'll see you again next week.